Welcome, Maverick traders, to Thursday. It's the 20th of October. Joe here with you as we get into the end of the week. Now, tomorrow is the 21st of October, and what does that mean? Well, it's Expiration Friday. So if you've got anything on your plate, I should say, or in your portfolio, make sure you take a look at that and make sure you understand it'll be gone after tomorrow's market. Speaking of which, folks, I've got an opinion on tomorrow's market. That's right. I'm going to share it with you. But take responsibility for the outcome. That's our disclaimer. You know how it works. Let's get into the markets today and what I've been seeing so far this week. Now, overall, we really haven't done much the last 2 days. We had that huge reaction to the CPI on Thursday and then Friday, as it's been doing. Folks, just a little side note. I'm going to bring this up again on the next slide. The last 4 Fridays in a row have been substantially bearish. So we had that Thursday move, a gap up, a big dark cloud cover candle on Friday. But it didn't really follow suit on Monday. We moved up a little bit, gapped up on Tuesday. But these last couple of days, we haven't done anything. We're actually at these resistance levels, which I'll show you here in a second. So back-to-back sideways days, the markets settle around resistance, right around, or I should say above and below, depending on which market you're looking at, that June low. So we'll see where we're going to go from there. Dow, the S&P, the Nasdaq, you can see the performance really weak, not even over 1% to the downside. We did give up a pretty substantial move to the upside. These markets started out hot. They looked pretty good, but we did give up all gains and close slightly lower for the session. The Russell's being the biggest loser, down over 1.25%. Now, oil's had its problems. It's had its push and pull. We know how tumultuous it's been. Supply issues, demand worries. We've got OPEC wanting to tighten up the spigot. Inventories are not building, or we'll see where this goes. Gold, on the other hand, is just flat. It's not really reacting. What is reacting is when the markets move up and down, and because of the interest rates going straight up, it's the dollar that we're starting to see a lot more volatile than the precious metals. Okay. Well, advanced decline line, 60-40, we'll call it. Well, 60-34, 6% didn't really go anywhere. So it was a general sell-off overall. Above and below the 50-day moving average, kind of skewed a little bit to, I should say, the optimistic side, as this was, I think, above 80% for the bear side, and now it's at 80-20. But once again, nothing substantial. Even with this really choppy, ugly-looking bear rally that we've seen in these markets since Thursday, nothing's really gaining traction outside of earnings. And so far, I've seen earnings is mixed. First off, let's break down the chart, because I really want to show you guys a couple of things that I thought was pretty interesting when it comes to this pattern. Now, what I mentioned earlier is we are kind of at this June area. Now, I can draw this low here, and you can see that we're revisiting it. With the SPY, it's a little bit more important because this gap up on Tuesday, was pretty significant, as it could have kept us above that 20-day moving average and actually climbed up to the 380 mark, giving us quite a different read than we're seeing now. Instead, we are slightly rolling lower. Now, the last couple of days, folks, you can see with the dojis, let me go ahead and erase those pins. You could see that we did come off of highs. So yesterday we came off a high to close flat, and today we actually came off a high and pushed lower to close down. Now we're sitting at that 20-day moving average. If I have to make a stance, seeing what's happened the last 4 Fridays in a row, I would not be surprised if we're pushing down towards the 360 level by end of day. Yes, now that's cool. I just made a call, didn't I? Now I could be right, I could be wrong. Right? So I'm thinking this is going to drop back in this area if we have the Fridays we had. And what am I talking about? Well, here's one there. Here's a Friday. I don't know if it's this candle or this candle. I'm going to go ahead and say this candle. And then the last one was, I can't see it. Maybe an up there or down. But anyway, so these last few Fridays have been pretty significantly lower. So that's kind of where I'm going off of. Doesn't mean I'm going to go jump into some bears pre and post market, right? It's post market now and pre market tomorrow. But I will be leaning towards the bear side. I will be seeing if any of my bears trigger, because that's kind of where I believe this is going, just on the pattern. Now let's take a look at the Qs, because it's similar. It's not exact. It's actually a little bit more pessimistic than the SPY. Here's the June lows. You can see it's obviously right back at it. We did get that pivot point that put us back up. This was intraday above its 20-day moving average and has had two side days that have done really nothing, but both have come off of, once again, highs to close negative for the day, both days. So we're starting to see the bearish presence win out when it comes to the end of the day, but we're not really gaining any traction or losing anything, not yet. So my stance is the exact same. If I had to take a direction for tomorrow, based on what I've seen the last few Fridays and this chart pattern that's been set up, I'm definitely leaning towards the bear side. Okay, so let's jump over to our heat map. And as you can see, it's pretty mixed. Auto manufacturer, Tesla's a big one. Let's talk about some of these earnings. Tesla missed. Some of the guys that are up here, actually. AT&T beat. IBM beat, up. Lam Research up. Las Vegas Sands isn't up here, but it's up. Philip Morris up. Or down. Philip Morris missed. BX is down. UNP, Union Pacific, is actually lower. So it's mixed so far. Some of the bigger ones that I've been looking at, they're up and they're down. It just depends on where they're at. So I thought that's pretty surprising. It's not really giving me anything to go off when it comes to the overall market, but it is pretty interesting to see how they move and how far they move. Like AT&T, for example, it's up massive. It's up a big percent, but if you take a look at its overall chart, yeesh, it's just not that strong. Tesla looks like it's actually broken support levels. It looks like it could continue lower moving forward. So it's this mixed bag. That's probably why the markets are hanging out. We're not really getting anything too clear. What is clear is my outlook. I'm not changing it. I'm -2 just based on the last 3 days. We had that gap up on Tuesday. Wednesday we gapped lower, couldn't climb back. Today we moved higher, couldn't sustain it, rolled lower. And if you take a look at those three candles on the SPY, it is descending. So the only thing holding us on is that 20-day moving average. I'm not changing my outlook on the monthly either. I am definitely -3. Sure, I'm projecting quite a bit for just this last little bit of a pattern. But if you take this -3 stance that we've had over the last couple of months, it's kind of hard to change it. If it's not broke, don't fix it, right? All right, so let's take a look at some trades. I don't have anything on the bull side that really even sparked. In fact, a lot of my bulls turned right around. General Mills was one that we were looking at yesterday in our Wednesday class, and it's got a big old red candle now. Doesn't mean it's a bad trade. It just means it's nowhere near triggering to this point. But I do have Dollar General and Coin still on the sideways side with Coin. I thought that was pretty cool. A couple of home builders popped up I thought were interesting. I liked Toll Brothers specifically. KBH, I didn't put up there, but I did put LEN. So Home Depot and then Match also looked pretty decent. Let's take a look at some of these. So here's DG on the sideways. The argument could be made that it might break down, but I'm including that in my sideways. I'll show you what I mean by that. I'm going to go all the way back to this area, and this is the obvious area that it's consolidating in. But I like the 200-day moving average. Let's go all the way back here to this area, down at the 230 mark. Sorry, I almost tailed off there. So I could play anything between 230 and 250. Yes, folks, if you haven't caught on to my habits yet, I do play sideways very wide, and the reason being is I don't like to get squeezed out of things. So that's a $10 spread up and down for you condor guys out there, 250, 260, 220, 230, something like that. Butterfly right around the 240 level. That'd be great too. I'm not sure if this announces or you might want to let this slide maybe towards the downside. A lot of you might want to get this tighter and shorter term, a 230, 235, 240, just in case it continues this little pattern down might work. It just depends on your time frame and what you're looking at. But I like it really wide. I still think it's got a chance. Once again, unless it does have its earnings, and that might kind of mess things up. Coin, on the other hand, has continued to stay between that 60-80 range. It's starting to slip a little lower towards the 60 area, the lower part, which would be expected based on the weakness in the markets. This is also something that pre-June, right before it set its low, it's back up to this area, and I do like that 80. It hasn't quite revisited as of late because I think the overall markets are still pretty weak, but it is chomping around more so between the 60-75 level, but 60-80 might be something a little bit better. It's still working. It's still working, I guess. So let's take a look on the bear side. I like I really liked Toll Brothers here. And this one was interesting because I did see that the housing numbers or existing home sales did tick lower today. And I'm like, okay, well, that should happen. Uh, all sorts of permits and new home starts and all that, they're also trending lower. So I can't imagine this is really going to do very well. I'm not sure how the earnings are going to play out. It might have a phenomenal announcement unless they've already announced. We'll see if that's going to hiccup anything in the future. But I do like the pattern that's descending right now. It just makes total sense here. Nice little descending here, triangle pattern going on. It's back at these June lows. Sorry, folks. Let me get something a little bit more specific. It looks like it's breaking down right now. Had that same pattern today. You could see the high shadow could not sustain those levels. Rolled past its open, closed lower. So nice little confirmation. If Friday continues as I expect, this could hopefully not gap down, but continue to go down so we can get into it, right? Right. Okay. Nice. And then match. I thought match was a cool one too. These are the only two that I wanted to share with you. Go ahead and take a look at the others on your own. Plus, we have lists and lists and lists. But I like match because it's obvious. You can see that beautiful descending pattern that we've had for quite some time. It just loves to stay below that 200-day moving or 50-day moving average. This pink line here, and continue lower. But I liked it. It had that same choppiness from last week, but it's got that fall, and today's candle just looked really, really nice. So I think it's got a good potential to continue to the downside. All right, folks, that's all I got. Obviously, you know my stance. I told you I was going to tell you what I believe is going to happen tomorrow. I don't see, outside of some sort of weird news, I don't know why we just don't roll over and fall apart. These markets have tried to do it twice. 2 days up, couldn't sustain it. Even if you go back to Tuesday, folks, it gapped up, but it was a red candle. It came all the way back down. So there is bearish activity there from the bull move. So the markets are set up to move lower. I showed you that chart, the gap up. It's moving lower. It's moving below the 20-day moving average. The last 4 Fridays have been actively bearish. I don't know why this would be any different. Economic news was light this week, but we are seeing some slowing in the manufacturing numbers. They've been dropping pretty quick. And the home sales have been slowly leaking lower, but they are definitely moving south. However, today's jobless claim wasn't very bad. The expectations were 236 and it was at 218. The jobless claims was actually a lot less than expected. Now, we do have earnings reports. Please continue to check that. We got Snapchat, Whirlpool, Verizon, and American Express are tomorrow. Snapchat as out, they're down over 25% right now. Whirlpool is down about 3.5%. So we'll see, both probably bad numbers. We'll see if that carries over to the markets and what Verizon and American Express can do on Friday. All right, guys, that's it for me. Thanks for joining me, and we'll talk to you next time. Bye, folks.